Akash, at a time when there is a proper rating scare going on, what are the chances that India could get hit hard? Because India's fiscal situation is also not very strong.
Yeah, but India anyway is just about investment grade. I mean, we're just, I think, BBB minus or something, whatever. So I don't think, you know, I mean, we are perceived as a very weak credit anyway, frankly. So I don't think that we're going to get downgraded or frankly affected by this in this way. I think the government has talked about a fiscal deficit reduction program. They may not hit 4.6, they may be 5.1, but I don't think there's a risk of India being downgraded because the fiscal deficit is 5 instead of 4.6. Anyway, we're BBB minus. I mean, you can argue, people have argued that, you know, why are we BBB minus and Portugal and Spain are still much higher ratings than India. So I don't think that's a relevant risk for India at the moment. And frankly, most investors, we anyway don't borrow. There's no sovereign borrowing of India anyway. Yeah, our entire borrowing is domestically funded on the government at the country level. I mean, we have some 10 billion quota for FIIs on the government bond side and some, I think, 25 billion on corporate, which is not fully used. Yeah, that's not fully used. So I frankly, I don't think there's risk to the Indian credit rating, and I don't think it's that relevant from a financing perspective. The crediting problem is coming for Europe because these countries need to self-finance these deficits from international investors. It's like Japan. Japan is 200% debt to GDP. No one cares because the entire debt is financed by Japanese investors locally. So it can be 300% as long as the local investor doesn't lose.
Just because Mr. Amit Bharti is here does not mean we should become overly bearish. We are not so bearish, but we are just frustrated.
Are you with India?
Yes, we are.
What's the reason?
No, as I said, I mean, you know, a lot of people focus on relative valuations, but my view is, you know, valuations are a function of policy, right? I mean, you know, so if today what is needed in an economy is relative policy momentum, and that kind of dictates earnings, basically, right? So you would pay a premium for economies and markets in this environment where, as I said earlier, you know, you have earnings which are as much less dependent on global developments, you know. So, you know, India today doesn't give me that opportunity. Yeah, there are, you know, certain stocks which are, you know, well-run companies, you know, which can march on their own beat, and obviously, you know, we like these businesses and we would be overweight. But on an country perspective, it's kind of difficult to make the call because my view is, you know, the perception is, well, you know, India is not so much linked to the global economy. Exports to GDP is only, let's say, 20% or 25%. But, you know, indirectly, you know, there's a lot of influence which global economies yield on India. You know, let's take, for example, China. The day China, for example, decides, I'm going to stockpile more oil. You know, again, oil goes up $20, you know, India's economy gets impacted. You know, we've seen, you know, some of the visa-related issues, what is happening, you know, in the IT industry. And that's a huge impact. I mean, your largest client is suffering. Your largest client has 9% unemployment rate. Let's assume a scenario when they make it more difficult for outsourcing to happen. I mean, that contributes $60–65 billion of exports, and it's a huge multiplier effect on the domestic economy.
So then why are you bullish on markets like Russia, Indonesia, which are largely export-oriented economies?
No, I didn't. What I meant was, you know, we like the energy complex, right? I mean, over a medium period, you know, you want to own energy assets, and, you know, you want to own energy assets within Russia which are cheap. You know, so it's that. It's not so we could be overweight Russia, but we could be underweight oil sector in any other part of the world. So it depends upon how you want to position your portfolio.
But is it a bit unfair to think that India should be absolutely isolated from the world and therefore it should have no influence? Obviously, there is no such space available in the world right now.
I agree, but I'm saying is today, you know, for example, in 05 to 06, when, you know, the world perceived that, you know, there's this huge infrastructure build out happening in India, that resulted in a lot of savings coming into India. Remember, we had the problem that, you know, we didn't know how. Yeah.
But Amit, what is your broader sense for Indian markets then? Upside and downside both is limited, or the downside is still open?
I mean, as I said, it totally depends upon global developments. Basically, if, for example, you know, there's a lot of redemption from emerging markets, you know, money will flow out of India. You know, I mean, if you had a situation where the domestic insurance companies or the domestic mutual funds were strong enough, then you could have made a case that, you know, the downside is protected. We are actually at the mercy of international financial markets.
Actually, I don't think we are, because this year also the flows have been about zero. And I think the world is systematically underweight on India. Because if you look at India's weightage in MSCI or other indices, India's weightage is half of Taiwan. and just because of free float factor, do you go and tell your investors the reason you like a certain market? You may not literally follow the MSCI, but you're obviously weighting off that index, saying that we like Taiwan and South Africa because it has free float. You don't say that, but in practice, it's the free float which drives. It's not ROC, it's not PE, it's not RONW, it is not opportunity, size of opportunity, it is free float. And
but that's how the institutional business
but institutional is not the only business. There are people who buy, there are 25, 50, 200 India-oriented country funds. I don't think there are 200 Taiwan funds because nobody buys those open-ended dreams. Nobody has an Indonesia fund.
I agree,
but so the money does not come in only with an MSCI index.